Okay. Okay. Good afternoon and welcome to the book launch of the BSP Book Project, Risk and Resilience in the Philippine Financial System. How much has changed? Good afternoon as well to everyone joining us on Zoom. Yes, we are live on Zoom and Facebook Live. We are live on Facebook Live, everybody. We are honored to have you here with us. This book grew out of recognition that understanding where we have been, honestly, rigorously, and in full institutional honesty, is essential to making sound decisions about where we must go next. The Philippine financial system has traveled a long distance since the crisis of the 1980s. But as the book itself reminds us, resilience is not a fixed destination. It is a continuous effort, one that must be sustained even as and especially when conditions grow demanding. We are honored to be joined today by distinguished guests from the Financial Stability Coordination Council, the banking community, multilateral institutions, the academe, and our colleagues in the media. Your presence reflects the broad community of interest in how this country manages financial risk, and that community matters greatly to this work. To formally open our program, may I call on the Assistant Governor and Head of the Office of Systemic Risk Management, our book co-editor, Dr. Veronica B. Bayagos.
Good afternoon, everyone. Thank you so much. Today, we launch a book that looks back on 4 decades of Philippine crisis and how they have shaped our financial system. Its title asks a simple but important question: how much has changed? This book is our attempt to answer that. One lesson stands out, that is, resilience is built. It comes from better laws, stronger buffers, clearer mandates, and the discipline to learn from past crises. Looking back helps us to do this work with greater focus and precision. The past also reminds us that shocks will come often without warning. What matters is whether the system can respond with strength, discipline, and enough policy space to act. That is why this book matters. At the same time, it reminds us that resilience is never final. It has to be maintained, tested, and renewed as markets, technology, and institutions evolved. In financial stability work, the task is not to declare that we are safe, but to keep asking whether the next source of stress may come from and whether we are ready. On behalf of the Office of Systemic Risk Management, I'd like to thank Governor Eli Remolona Jr. for his guidance and for contributing a chapter to this book. I also thank Monetary Board member Romy Bernardo for leading the initial brainstorming bringing together the right resource persons and helping drive this project to completion. I am also grateful to Dr. Ramon Moreno for his rigor, patience, and for consistently asking the question every good editor asks: what exactly are we trying to say? He also helped frame the narrative of the book by leading both the opening and closing conferences, an approach that is new to the BSP. A book on crisis needs someone willing to challenge every paragraph and sometimes even the font and cover of the book. Finally, I thank the resource persons, the talented authors, and colleagues across the BSP for the hard work behind this project. Now, in a moment, we will watch an audiovisual presentation on how this book came to life, followed by a message from our governor. We will then proceed with the rest of the program, including the book signing. Thank you, everyone, and good afternoon.
Okay. Thank you, Assistant Governor Bayangos. At this point, we invite you to watch a short presentation that traces the journey documented in this book. From the debt crisis of the 1980s through the Asian and global financial crisis, the COVID-19 pandemic, and the stress episodes that tested and ultimately sharpened our financial system. This presentation is not a retrospective of triumphs. It is a record of how difficult episodes produced necessary reforms and how those reforms built the buffers we continue to rely on and work daily to reinforce. We invite you now to turn your attention to the screen as we begin this audio-visual presentation.
In the last 5 decades, the Philippine financial system has faced shocks, some sudden, some systemic, and some isolated. From the Philippines' debt accumulation in the 1970s to a global pandemic in 2020, each crisis left scars and lessons. This book is more than a record of past crises. It is a story of how the Philippine financial system grew stronger through disruption, reform, and resilience. The narrative shows how fragile moments became turning points and how resilience was built into the system, one crisis at a time.
The good news is we've learned some lessons. Each crisis has made us stronger. This book captures those turning points told directly by people who were on the ground. Their narratives help us understand past crises and respond better to the next one.
Easy credit in the 70s pushed the Philippines into risky borrowing. When global rates spiked in 1983, the country crashed into a lost decade. It's La Década Perdida. The lesson was clear. Without strong buffers and disciplined borrowing, today's euphoria can become tomorrow's crisis. In 1981, Dewey D's single default triggered a systemic collapse. Liquidity vanished and trust evaporated.
Bank runs are psychological. When people place money with a financial institution and they get nervous, the first thing they do is, first of all, not to renew the placement, and secondarily, to withdraw the money. And so that's why everything snowballed. From the tiny fraction, it became kind of system-wide.
During the Asian financial crisis, turmoil spread like wildfire. But the Philippines remained strong as it was less exposed and more prepared compared with the rest of the region. When the global financial crisis hit, Philippine banks, shielded by post-1997 reforms, stayed afloat. There were no bailouts, no incidents of collapse. The reason? They benefited from limited exposure to toxic assets, strong capital, and prudent regulation. The central bank also acted decisively with monetary easing, liquidity support, and flexible rules. COVID-19 brought the steepest GDP contraction in Philippine history, 9.5%. Non-performing loans rose, and liquidity tightened, but the financial system weathered the crisis and remained resilient. Regulatory relief, Digital acceleration and legislative initiatives helped banks stay stable and allowed much-needed credit to continue flowing.
Fortunately, the effects of the pandemic were not as cruel as the effects of the global and Asian financial crisis. I think because our banks, no, because of the prudential approach of the BSP, no, in supervising them, were better prepared to meet those challenges.
Even as the system grew stronger, new vulnerabilities continued to emerge. From Bancap's fake T-bills to Urban Bank's collapse and Ammon Future's pyramid scheme, each exposed new vulnerability. The 2006 UITF panic taught us about investor education. Hanjin's 2019 default reminded us of credit concentration risks. Each event, though isolated, tested the system. But none became systemic as the industry and the people behind it learned well from the past.
Our action should be able to address the root cause. And most often, as I mentioned, it's really corporate governance.
Today, the Philippine financial system is a network, interconnected, adaptive, and increasingly resilient. Regulators act preemptively. Banks stress test, disclose, and prepare. Crises are scenarios that are planned for and met with wisdom and courage.
As far as the reform was concerned, so the first thing is how to increase the capital of the institutions because that is the main weakness.
In general, crisis always come as a form of surprise. Okay? Crisis arrive unannounced, right? And you cannot time the next crisis, but surely you can prepare for it.
The book tells not just a story of survival, it is a story of transformation, of a financial system that refused to break and instead chose to bend, learn, and rise. When a crisis comes, it will be met not with fear, but with foresight. And in every storm, we will find our strength.
Okay. Thank you to the production team for that presentation. Allow me now to introduce our next speaker. He is not only the head of the institution that produced this book, he is himself a contributor to its pages. His chapter, co-authored with director Justin Ray Angelo J. Fernandez, examines La Decada Perdida, the debt crisis of the 1980s that ensnared the Philippines and the long, painful road to recovery. That chapter is a reminder that the institutional distance we have traveled was hard-earned, and that it must be actively and vigilantly safeguarded. Ladies and gentlemen, it is now my honor to invite the Chairman of the Monetary Board and Governor of the Bangko Sentral ng Pilipinas, Dr. Eli M. Remolona, Jr., to deliver his message.
Chief Justice Art Panganiban, Governor Saite Tanco, Governor Joey Quisha, Governor Philip Medalla, Monetary Board members, Chair Francis Lim, President Bobby Tan, bankers, colleagues, and friends, magandang hapon po. Nobel laureate Robert Schiller once said that narratives shape economic outcomes. So it's not just the numbers we love to model, but the stories that people tell. Markets, after all, are made of people, and people do not respond to economic data alone. They respond to what they hear from friends, what they read in the news, and increasingly, what they see on social media. That's why we wrote this book. It tells the stories behind some of the most important financial crises in our history. And those stories matter. Unless we understand how narratives spread, we cannot fully understand how crises unfold. Sometimes the most dangerous narrative is the reassuring one. As Minsky famously observed, too much stability can create complacency and plant the seeds of instability. We've seen this over and over. We saw it in the Dewey D episode, we saw it in the Asian financial crisis, we saw it in the global financial crisis, and we saw it in the pandemic. In every case, overconfidence allowed vulnerabilities to accumulate until all of a sudden, confidence disappeared and gave way to panic and catastrophe. I contributed to the chapter on La Decada Perdida, or the lost decade. The term belongs to Latin America, but the Philippines was part of it. Indeed, Paul Krugman said the Philippines is part of Latin America, except that it's on the wrong side of the Pacific. So the characters change, the details change, but deep down, the stories are the same. They teach an enduring lesson. Buffers must be built before a crisis, not during one. Capital must be strong before losses emerge. Supervision must be credible before confidence is tested. By understanding how these past crises unfolded, we become better equipped to question optimistic narratives, detect risks earlier, and respond more effectively when the next shock comes. The numbers will always matter, but so will the stories we tell about them. I thank the authors from within and outside the BSP. I thank the co-editors, Ramon Moreno and Oni Bayangos, for heading this effort. Let me also thank the storytellers, Justin Fernandez, Johnny Ravalo, Diwa Gunigundo, Faith Cacño, Dante Canlas, Hazel Porcon Santos, Jose Tangcanco, Zino Abinoja, Dennis Lapid, Alicia Lirios, and Benjamin Radok. Maraming salamat po at mabuhay.
Thank you, Governor Remolona, for the message. Our next speaker brings 4 decades of central banking research to this project, from the Federal Reserve Bank of San Francisco to the Bank for International Settlements. His perspective anchors this book in international scholarship while remaining firmly grounded in Philippine financial history. To draw our formal program to a close, may I call on book co-editor, senior consultant to the BSP Research Experts Panel, and former visiting professor of economics at the University of the Philippines, Dr. Ramon Moreno.
Thank you very much. So I'm very pleased to address the BSP and its distinguished guests today for the launch of the book, Risk and Resiliency in the Philippine Financial System, How Much Has Changed. I'm particularly honored to have been asked to co-edit this volume because I'm not BSP staff and have lived abroad for decades. But my professional career has been spent interacting with central bankers and economists in emerging markets and also in advanced economies, first at the Federal Reserve Bank of San Francisco and later at the Bank for International Settlements, which is an institution in Basel owned by central banks, where I headed work on emerging markets and later on the Americas. So what I have tried to contribute to this book was a somewhat different perspective from someone who has lived outside the Philippines, but who has worked in countries who resemble the Philippines in many ways, a bit related to Governor Remolona's comment a moment ago. The question mark in the title, How Much Has Changed, is an invitation to reflect. Can we say, as the French do, or perhaps complain, that the more things change, the more they stay the same? Or can we say instead that things have truly changed in the decade since the 1980s crisis described in this book? If you read the book, you may find that both answers are true. On the one hand, if you compare the 1980s and the 2020s, you may find that much has changed. In the 1970s and 1980s, there was limited understanding in the Philippines and in many other countries of how vulnerabilities accumulate and how the resulting risk might be effectively managed. By the late 2010s, the country's capacity to absorb shocks had increased considerably. Several developments contributed: the establishment of the BSP in 1993, the adoption of inflation targeting and stronger financial regulation and risk management, and a notable period from the mid-2000s to 2019 of declining national and external debt, accumulating foreign reserves, and the achievement of sovereign investment grade status. On the other hand, certain challenges recur and appear to limit the ability to escape the so-called middle income trap, in which many developing countries find themselves unable to graduate to a higher income category. Since the 1990s, according to the World Bank, only 34 countries graduated to the high income group, while 108 economies stayed in the middle income category. A few days ago, it was announced that the Philippines, whose income per capita is now nearly $4,900, had graduated to the upper middle income group. This is welcome news, but experience shows that to graduate into the next high income tier will require a lot of effort. Philippine growth fell behind that of its Asian peers at the time of the debt crisis of the 1980s, and the Philippines has not fully caught up since. Severe crises occur relatively often, are hard to anticipate, and in many cases, such as the global financial crisis or the COVID-19 pandemic, are clearly external, largely outside the control of policymakers. Governance also remains an ongoing concern. Some countries have advanced despite weak governance, but the evidence suggests that economic growth and investment are slower and riskier when such problems pass a certain threshold. So to sum up, my personal takeaway is that a stronger, more resilient foundation has been built and the achievements are real, but future success will depend on ensuring that the lessons of past crises are not forgotten. The book is an effort to highlight some of these lessons and a reminder that work remains to keep that progress from slipping. So let me close by thanking people, because this book would not have been accomplished without them. First, the senior management of the BSP for supporting this effort, especially Governor Eddie Remolona and Monetary Board member Romeo Bernardo, who to a large extent conceived this project. BSP Assistant Governor Dr. Veronica Bayangos for her expert inputs, diligence, and patience. The authors of the various chapters, former senior officials and financial sector executives, and resource persons who shared their insights and deep knowledge of the Philippine economy and financial system, and our BSP research support staff and the book designers and copy editors who accommodated my sometimes inconvenient requests with grace and expertise. Finally, I would like to thank all of you present today in person or online for your interest in this book. Thank you.
Thank you, Dr. Moreno. On behalf of the BSP Book Project team, I extend our sincere gratitude to all our guests, policymakers, regulators, practitioners, scholars, and members of the media for joining us this afternoon. This book belongs to the broader community of people who care about Philippine financial stability. It is our hope that it serves not as a record of what has already been achieved, but as a guide for the work that remains. At this point, ladies and gentlemen, there's a QR code for providing feedback on our book launch. You can have it there. It's there on the table. You can scan it on the table in front of you or online in the comment section or the chat box. We would like to thank our participants in Zoom and Facebook for having joined us today. Thank you very much.